Sanjay Sethi is the Managing Director and CEO and now joins us on the show. Good to have you on board, Mr. Sethi. Thanks so much for joining in. Let's begin by discussing your quarterly performance. It has been a healthy profit growth this time around. Take us through some of the key drivers.
Good morning. Yes, we had again a very satisfying quarter, and it's 5 quarters on a trot now. So things seem to be stabilizing and growing at a pace that is encouraging. We've had a total revenue of about 318 crores, which is roughly 27% higher than the same quarter last year. Our EBITDA at shade under 130 crores is roughly 48% higher than the same quarter last year and 14% higher than the sequential quarter. Margins at 41% are almost 6 percent points higher than the same quarter last year. So again, healthy growth over there. And the profit before income tax is 2x of same quarter last year. And this is backed by hospitality performance doing extremely well. And, we had 21% growth on the rates compared to the same quarter last year. We've also had some occupancy increase. It's increased by 2% to 73% this quarter. And on a combined or RevPAR basis, the RevPAR is up by 25% compared to the same quarter last year. This is clearly a result which is in line with what the trends have been. And we believe that this is sort of got institutionalized in terms of now steady business going forward.
It is, in a sense, seasonally the best quarter for the hospitality industry. Now, for the quarter gone by, 40% margins, capacity addition, good room rate. So then what happens in this current quarter, which in a sense, you got Diwali, Dussehra, Christmas, New Year's? What happens now?
So, Nikunj, quarter 2 is seasonally the worst quarter of the year, actually. And whilst we'll have the holidays, and our occupancies will dip during the holidays, given that we have our portfolios primarily in the business hotel cities, it'll still end up doing better than quarter 2 for sure. And if you look at our historical performance for the past several years, you'll find Q3 outperforms quite Q2 by a significant margin, and then Q4 tends to outperform Q3.
The current quarter, which is October, November, December quarter, is the big quarter for the hospitality industry, for the hotel industry, for factors which we just discussed. Now, what we're discussing, sir, are numbers for the quarter gone by. What I want to understand from you that for the quarter gone by, which is a weak quarter, you've come out with good set of numbers. Now, when the season will kick in, the natural tailwind kicks in, what surprise we should expect from you? See, right now, what markets want to know is the quantum of surprise. Everyone knows that you're in a good spot. Everyone knows that smiles are back for hoteliers. Everyone knows that consumers will have to pay more. But shareholders want to know that how much will you keep on surprising us?
We're not in the habit of sharing surprises up front. We don't like surprises as a business. We like business to grow on a steady basis. And that's the trend that we've been noticing for 5 quarters now. And I'm very confident it will continue to grow on a steady basis in line with the current dynamics of the industry, where demand continues to outperform supply by a big margin.
Theory, you're giving me a vision statement. Give me some more substance.
We don't give forward-looking numbers. I can't give you any more substance than that.
Do you see the trend will last for at least next 4-5 quarters, this uptrend?
Yeah. Nikunj, I do expect the average room rates at least in the business cities to grow in double digits for the next somewhere between 7 to 8 quarters at least, compared to the previous quarter of when you compare them to the previous year's the same quarter. And that's backed by the continued gap in the demand and supply situation. And you've got to keep in mind that all the growth that we're showing right now is still in a very VUCA world. The geopolitical world is globally is in quite a lot of turmoil. And yet the hotels are delivering these numbers on the back of very strong domestic demand and return of international business also. So both that combined together give us a strong base to launch the next few quarters from. And going forward, we do believe at some point of time, international travel will also come back. Inbound international travel will also come back with a big bang.
All right, fair enough. That's a pretty strong projection. But what about the outlook then when it comes to the leasing of commercial assets? Because I know that that is one of the key strategies that you adopt. Are you worried that asset ownership with high debt levels could be a risk when we see the industry in a downturn?
No, so look, it's not as if we've got massive real estate to rent out. We've got roughly a little shade under of 1 million square foot at Bangalore, out of which 200,000 is already leased out and occupied. Another 50,000 we signed the term sheet for, and we've had, we're in advanced stages of closing term sheets for another 200,000. So we're getting there fairly quickly in Bangalore. Mumbai, the building is just about getting completed, and once the full product is, for potential clients to see, we do expect traction to pick up. It has been slower than what we expected, but it'll push it back by a quarter or two. We are not worried about having vacant buildings. Let me clarify that.
Okay, great to chat with you, Mr. Sethi. Thanks as always for taking the time out.
Thank you.